Good Friday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamanik. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the
Excellent.
disclaimer. Yep. I'm going to share my screen. As I'm doing it, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, analytics. If you have a question, type it into that live chat on YouTube. Will's watching it. He'll read it back to me. To give you guys a couple minutes to put in your questions, what we'll do is start out taking a look at the pre-market report to see if we could get insights on what's trading the pre-market hours, and then we'll move on to the questions. Okay, so pre-market report. These are stocks trading in pre-market hours. We're going to start here on this calendar view. As you could see, you could go back dates in history if you wanted to take a look what happened in a pre-market hours that date. Right now, we're on November 3rd over here. And this is what's going on from a high level so far. We have 578 stocks trading up in a pre-market hours, 214 stocks trading lower. As far as volume of shares, we have 104 million shares trading on up volume versus 43.6 million on down volume. And if we convert that volume to dollar value, we got $4.1 billion worth of stock trading higher versus $1 billion trading lower. So far in a pre-market, from this perspective, looks like the trading in a pre-market hours, it's got some bullish sentiment. Let's look at it from a couple more perspectives. We're going to come down here. And here we have a list of our most active stocks in the pre-market hours, our biggest percentage gainers, biggest percentage decliners. I see 174 stocks made our percentage gainers list, 58 on our biggest percentage decliners list. So that also indicates a pretty, skewed bias towards the bullish side so far. And if we do look at this list, though, you could see that, there are stocks that are low cap stocks in there, ETFs, leverage products, any security listed on the major U.S. exchange. If it meets our thresholds, so it does have to meet certain thresholds that we set to make this list. And to narrow down this list to a smaller group of stocks, we could use the filters above over here. If you have a watch list, you could use your watch list. We're going to use this filter here in ETF. So if I click on it, you get a list of ETFs to select from. We're going to choose this one, SPY, which is the S&P 500 ETF. And when you do that, the list below gets filtered by stocks that are holdings in SPY, which are the S&P 500 constituents. And here we see 40 stocks made our percentage gainers list, 5 on the decliners. So, so far, every way we look at it, the sentiment and trading in a pre-market hours is overwhelmingly, as I would say, leaning towards the bullish side. And I think that's, some of it has to do with what the Fed said and maybe some of the numbers coming out today that is leading to the conclusion that, the Fed's done tightening. Perhaps they did enough and the economy is not so bad. Earnings are not so bad. So people are putting risk on. And it helps that the oil prices came down, I think, from 95 to, sold off from $95 a barrel to like almost down to the low 80s.
Yeah.
So that's good news too. And the long bond, hit
Well, it's
5%.
good news when it hits the retail market, right? For us.
Yeah, exactly.
I
If
mean,
it filters down, right, you're hoping that filters down. There's I'm sure there's like a lag to it, but you're hoping it filters down. That that helps consumption because now you have more money to spend on other things. And I think the 10-year bond has been rallying. Like I think it hit 5%. Now we're down almost to like, I don't know, 4.6, 4.55, something like that.
yeah, these moves in the bonds, it's amazing
It's
because
incredible.
they do seem like very volatile after all these years, right?
Yeah.
Like it's amazing that they're not putting players out of business, but I guess it's all algorithmically driven and they don't have big positions. I don't know, but the moves seem
Yeah.
dramatic.
Yeah. Yeah. Very, very volatile in the bond markets. And I think, they're going to be issuing more bond. The deficit is increasing. We're going to be borrowing more and more money. So I think that there's going to be more supply out there. And, and the Fed theoretically is staying out of the way at this point. They're not buying any, whatever bonds they're holding, they're not selling bonds, but whatever bonds they're holding, once they mature, they're not reinvesting it into new bonds. So they're trying to let that balance sheet decline in that way.
I heard something interesting yesterday. Now that we're just before questions, we're talking a little bit about the market.
Yeah,
Something that could affect the housing market, the real estate, or the insurance market.
yeah,
This, and correct. Let me know if you and I have already discussed this hurricane, this category 5 that hit Acapulco, Mexico last week.
yeah.
Did we talk about that at all?
I don't think so.
Well, the amazing thing about it, it's the first time since they've been tracking hurricanes now. That only goes back about 50 years,
Yeah,
but it went from a tropical storm and within like 6 to 24 hours.
yeah,
I think it was 6 hours because people went to bed thinking a tropical storm was coming and then woke up at 6 a.m. in the morning to a category 5 hurricane. So imagine Acapulco is like Miami Beach, like all these high rises.
yeah.
Windows were being ripped out of the buildings.
Oh my God.
Not one, I mean, they model these hurricanes are like, I don't know, 20 different models.
Yeah,
And not one model had this even as a possibility.
really.
It wasn't even so. The podcast I heard yesterday, the All In podcast, they were talking about the reinsurance business.
Yeah,
Like for them, this was like a unfathomable issue because
yeah.
they never imagined that the models could be so wrong. So supposedly they're going to have to reprice all reinsurance. So that's going to cost all the insurance companies way more money. And if you look, and there was another article in Florida about a family in West Palm
Yeah,
who, like 8 years ago, were paying, I don't know, let's say $10,000 in insurance a year.
yeah,
And West Palm's, off the barrier island, right? I mean, we've both been there.
yeah.
And now their insurance is 100, their last quoted insurance is 130 grand.
Wow. No, I did. I have been reading that in Florida, yeah, the insurance prices are skyrocketing, just going upward. It used to not even be something that people talked about. It was more like the mortgage rate. Now the insurance to insure those houses, that's become a really big cost of carry now, down in Florida. And yeah, you hear more and more about it. Insurance rates are skyrocketing.
Yeah, it's
Yeah,
I
the
mean,
cost of ownership there.
Florida is the first place to really feel it, but it's anyone in a coastal environment is going to start. What they said in the podcast was the reinsurers are literally leaving. They're like no more reinsurers in Florida, which
Yeah.
means insurance companies are leaving, right? So the reinsurer is actually the state of Florida now, and you
Oh,
know how much money they have in that you know bank account for the reinsurance of real estate in Florida?
Imagine not that much.
Yeah, like zero.
Yeah,
It's already bankrupt. So there's literally, even if you're buying insurance, it may not be, it could bankrupt whatever insurance company is selling you insurance in Florida.
yeah,
It may be not worth the paper it's being printed on, basically.
yeah. No,
So,
it's yeah, it's becoming a big problem down there. Um, all right, well, are there any questions today we could take or
let me see. Nothing had popped up.
okay. Um, I guess what did we leave off yesterday? Was it the
We were taking
uh,
some questions, right? We were looking
yeah,
at, were we looking
I
at,
think we were looking at its seasonality maybe.
yeah, it was actually, the comment came up about the seasonality going into, you were going to look at SPY and the seasonality
Right.
into the new year.
Right. So this is the seasonality. I think that's where we started out, where, we're talking about November, which, I think we're day 3 in now. It was tended to be a very strong month. And we could see here just in the first 2 days, not, this, we'll see what happens today, but it looks like we're already setting up right now to open higher. We're up 3%. All right. And we can see here that these are the historical occurrences. 90% of the time it was higher. So just that alone, that alone in 2 days, 3% is probably itself unusual, in an unusual uh rally. I'm sure it happens, but that's a pretty big rally in 2 days. And here we have just, if we take a look at for the entire month, if we took for the entire month, the average move in November, so up or down, so from begin to November to the end of November, the average move is 3.5%. We're ready, probably, we're ready today. We're going to be up if we hold on to that gain, 3.5%. So very big move so far in the month of November. But if we looked at it as the range, of high to low, you could see that, we had a 10.9% move as well. Let's take a look there. So over here, up 10.9% in 2020. So you could see there, if here's one up 5.6%. So there's still, even with that 3.5%, we could still see more, more volatility, more movement. But just in the first 2 days, I would say that's a pretty, pretty big move already. We're already up 3.5%. Let's take a look at it from the perspective of the volatility. So I'm going to go here to, actually, let me see. That's not here, seasonality right here. So take a look at how the implied vols did in November. So you could see here, this is kind of the start of November. So from the start of November to the end of November, we just saw, steady declines, which kind of makes sense if the markets tended to rally in November, while implied volatilities come in, right? So they work inversely most of the time. As markets go up, implied volatilities tend to come in. So we could see here that we're here at the start, and as we were looking, we're seeing, implied volatility tends to come in. And if we wanted to take a look at, here, the average implied volatility for the month of November, we could see that it's 4.2 versus, October 16.2. So you could see how much, it tended to decline from that average. The median 14.6 versus 13.7. We could come down here. And I know there's a lot of stats here, but bear with me. I'll go over this. This is the implied volatility stats from the start of November to the finish, right? So what we do is we take a look at where historically. So right now, we're not quite finished in November. This is what, where we started, where we are now. But you could see here how from the start to finish. So here on average, we took the average, from 16.2 down to 14.1, right? Just that's only taking the first, not the average, but November, the first day of November to the last day of November. Median 13.7 to 13.5. And these are the high start to the high finish, the low start to the low finish. Okay, so that's kind of gives you a historical perspective of how implied volatility tended to do in the month of November. All right. I guess we could go down. I think I didn't push this out yet. Trying to take this table and make it a little bit easier to read visually, because there's a lot of data thrown at you guys. So I think I didn't push this one out yet, but we could still get some insights. Over here, if we looked at the implied volatility versus realized, right? So this is looking at comparing what the options implied versus like the realized volatility, and did the implied volatility tend to overestimate or underestimate the move for the month of the calendar month. So that's what this is looking at. So let's go to November here. Let me slide over. So here we have the implied vol versus the realized vol. All right, so we're looking at the averages, and we see that in the month of November, so this is by year, right? It's looking at, so here the implied vol underestimated the realized, right? The realized vol was higher. So that's saying it underestimated, this is overestimated. So you could see here that when we compare it historically on average, and on the median, it tended to overestimate it for the month. Okay, so basically that's why the implied vol makes sense, kind of started coming in, getting dragged down with the realized vol coming in. All right, so that's one, another insight to look at. So that's like from the perspective of seasonality. I guess, well, I don't have any questions that came through to talk about, and if there are no questions, I might end it here for the weekend, because
no worries. I'm looking
okay. Which is
there's a lot of platform discussion on the chat, but nothing here, Rob did ask a question. It says, would Dimitri discuss the variation in standard deviation during the day? If you call up the SPY, you can see hour by hour the change.
So what is it, is he looking at a specific report?
Rob, you want to let us know where the report is? The full question is, just so we're clear, would Dimitri discuss the variation in standard deviation during the day? If you call up the SPY, you can see hour by hour change. I'm guessing, Rob, is there some place you see the hour by hour change in the SPY report?
Yeah, but we'll take a look at this then, maybe this could be relevant with the stand. So, and so and that's a good question, maybe relevant to this chart here. When we look at this chart, um, we look at the yellow line over here, right? This is the day's VWAP, volume weighted average price. So instead of just the last price, it weights it by the volume, right? So if 100 shares traded at one price and 1,000 shares traded at a different price, well, the 1,000 shares gets 10 times more weighting than the 100 because more shares traded there, right? So it's volume weighted. So that's what the yellow line is. And the blue line here, the blue line is the last price. So it's showing how the last price is moving away from the volume weighted average price, right? So for example, you could see here that the prices are running up, and the volume weighted average price is not catching up yet because it needs more volume to catch up, right? So just yesterday alone, we looked, it looked like it was just, trending higher and higher and higher the whole day. It was a very strong day. And that green line, when we get to the standard deviation, right, that this is the green line. We have two of them, one going up, one going down. That is looking at the standard deviation move. So that's a one standard deviation move, the stock last price versus the VWAP price. Okay, so how far away are the stock and VWAP price divergent? And that's a one standard deviation move, and that's updating throughout the day because as you get new data, you're recalculating it. All right. So in this instance, you could see that it was really, kind of went up to that standard deviation just kind of the whole day, just right there traded on that top line, right, on that one standard deviation line. So it was a very strong, day yesterday in the market, constant bid there. That was moving the markets higher. And you could see here, I mean, yesterday alone, it's up 2%, in one day. So that here, why do we tend to use standard deviations to figure out how far away two things are diverging from, a historical perspective, right? And it's like a relative, right? In this case, it's like a relative value. How far away are the prices moving from its VWAP, and we measure it in terms of standard deviations, right? So we would tend to think that based on historical relationships, that 2/3 of the observations will be within those in the band. If it goes outside, it's like breaking out already from the anticipated range if we use those historical relationships, but they change, right? So this band could go up and could come back in because as new data keeps recalculating going forward. So that's standard. I'm not sure if I hit upon the question, but I don't know where.
Yeah, Rob, then he does mention below the options chain, there is a click to change snapshot box with the hour by hour time.
Below the, okay. So in this options chain, and
yes,
and what was the question?
he's asking there's a below the options chain, there is a click to change snapshot box.
Okay.
And it's got an hour by hour time, he says.
Okay, yeah, like down here you could go back in time, right, and look at. So like for example, here's an options chain. This one with the last snapshot was right before the close, 3:59:30. But if we wanted to go back intraday, or if we wanted to go back intraday, we could click on, like, let's say 1 p.m. And if we click on 1 p.m., it tells us this is where SPY was 429.12, right? This is the 1 p.m. And this allows us to go back and see, well, how did the options look like at 1 p.m., right? So let's say at 1 p.m., you were considering, buying the 430 call, right? November, this one expired yesterday. So at 1 p.m., you could see it was 39 cents, 40 cents. And then you wanted to look, well, how much did that change by, at the end of the day, right? Or maybe by 2. So if we wanted to take a look at, I'm not sure how it relates to standard deviation, but unless
Yeah, Rob just said the point for me is that if I have a 0-day trade on SPY and I close it, I need to see what the standard deviation is for the next possible trade, is what he's asking.
I'm not.
Anyways, we're right up against the hour. Rob, if you want to
Yeah.
come in and discuss this, maybe we can do it on Monday. That'd be excellent if you wanted to come in live. Just email support at MarketChameleon. Rob's always good emailing us questions and ideas. So emails if you want to discuss it real time, Rob, so we can walk through it. Everyone, thank you. Chuck made an interesting observation at the end. He said, without the Magnificent Seven, the remaining 493 of the SPY are averaging negative for the year as of October 23rd.
Yeah. So right, it's a really very top weighted. Right now, we're very top weighted in the rally.
Yeah, I can't say we've ever seen anything like this, but
yeah, this is very new. Everything's kind of flowing into those tech stocks, the big techs so far.
All right, my friend, great job. You have a great day and a great weekend.
Yep. Thanks everyone for joining. Stay safe out there. Have a great trading day, and